Good morning, good afternoon, and good evening. Welcome to this special edition. We have a great guest today, and Janaize Markland, who is the risk manager of Facebook, is with us here today. She's in San Francisco. So Janaize, good morning, and thank you so much for taking the time and to do this with us. How are you?
Excellent. Thank you, Ivan. I'm glad to be here.
I have to tell you that when we were thinking of inviting a guest that can walk us through risk insights, your name was on top of the list. You are the risk manager of one of the most innovative and largest companies in the world, but you also have a fascinating history in terms of your prior job and also how you came to the insurance industry. So we're very grateful that you have accepted our invitation.
Well, thank you for having me.
I would argue that a relatively small number of people who ended up in insurance started in insurance or thought all their lives that they wanted to be in insurance. So why don't you tell us a little bit about how you ended up in risk management?
Sure. Yeah. So I was working at PG&E actually, and I was in a compliance meeting, and there were a lot of people talking about priorities. And I just thought to myself, there just has to be a singular way we can all get behind the same priorities. And that's where I first sort of sparked my interest in risk management and started just digging around on my own. And then I reached out to our chief risk officer, Anil Suri, at the time, and just suggested that we should do things differently. I really didn't have any idea. And he said, oh, okay, that sounds interesting. And then so we started just talking, and probably about 9 months after that, the San Bruno pipeline explosion happened. And it became clear that PG&E needed just a fresh approach to risk management as a program at our company. And because I was interested, he said, hey, do you want to come build something with me? And I said, absolutely. And that sort of started my passion for risk management. And then about 4 years into that, he encouraged me to take on the insurance portfolio as well, because the two really do go hand in hand.
Sure.
It's, just a matter of identifying risk, knowing what your potential exposure is, how you're managing it, and what you need in terms of financial protection. So that's how I really ended up in insurance.
So how has your role evolved as you moved to Facebook?
Yeah, so my role is a little different here at Facebook. It's primarily focused on insurance and getting the insurance that the company needs, which is also an interesting story because, Facebook is obviously a very successful company, has got a lot of money in the bank, can tolerate a ton of risk. So my first question when I joined the company was, why do we buy insurance at all? So I spent the last year trying to figure out why. And, there's some very good reasons for it. We're kind of going through that now. I'd say that the challenges at Facebook are different in that Facebook is a much different company from one day to the next even. The pace of change in the services and the products that we offer, the innovation that's going on with respect to AR, VR, Oculus Quest, all of the offering. I think we launched like 5 or 6 new products during the pandemic. And each one of those things changes the risk profile of the company. And so when you renew your insurance only once a year, how do you then anticipate all of the new things that we're going to be getting into and capture that in your exposure assessment? So that's been a fun challenge at Facebook, is just trying to stay on top of what the company's doing so that you can match what you're doing to the direction of the company.
What are the main kind of priorities for you in your role right now in terms of new trends, emerging trends, the cliche, quote unquote, of what keeps you up at night? What would be in that list?
Oh, yeah. What keeps me up at night? Actually, not a lot. I sleep pretty well. And I think that's back to the concept that risk management helps you sort of get organized around an approach to dealing with a lot of unknowns. So you do your best to identify and evaluate them. You try to understand what the strength of your controls are, and then you look at the leftover exposure and what you should do with it. I think our challenge right now is to think about what can Facebook reasonably and sensibly retain on balance sheet versus what we should transfer to the markets. And then even if we do make a transfer decision, should that be to commercial markets or should that be through our captive in some way? And so we're working through that thought process, getting senior management input and buy-in on it so that we can then use that as our strategy for how we think about insurance going forward. Because like I said, I mean, Facebook in a lot of ways is a very challenging place to be a risk manager, but it's also kind of a forgiving place in that it's a very healthy balance sheet company. The insurance is not going to make or break Facebook. It's not something that's going to keep us out of bankruptcy, but it is helpful and we should buy it when it makes sense. And we're just kind of going through that process to figure out when it does.
You were telling me before we started this conversation about kind of the structure that you currently have in place within kind of the risk management team. And both in terms of size, in terms of the tools that you use, can you maybe comment a little bit on that as well?
Yeah, so there's 4 of us. I joined a year ago, and there were 2 of us, and so we've grown by 100%. I like to joke, but that still means that we were only 4 risk managers. What we are focused on, and our team is basically split between property and casualty and just the associated lines with that. But what we're trying to do is move upstream of risk. So where can we engage with the business to identify the current state of controls? Where can we offer ideas on how to reduce exposure, frequency of events, consequences associated with those events before anything even happens? So we're moving more towards like tactical operational risk management, in addition to our traditional role of purchasing risk transfer for the company. So that's been fun. I think it's been quite energizing for my team as well. They really like getting into the business and figuring out how to be helpful. And so, yeah, we're very much focused on that.
And what about the tools? Because when I talk with some of your peers in some of the large technology companies, they always kind of make a bit of a point that they work for these super high-tech companies at the same time. Because of where the insurance industry is, sometimes the overall kind of management of insurance programs, exposures, et cetera, is done in Excel, which for them is kind of like a bit of a joke. But the industry obviously will need to evolve, and I think that provide risk managers in particular the tools to be able to manage this in a much more sophisticated way. So how do you see it from that perspective?
Oh, I have my wish list of what I would like to have, and then
I brought a pen. I brought a pen because I want to write exactly what your wish list is.
Oh man, yeah. Okay, so we'll get into that in a second. But what we do have is, like every other risk manager, a bunch of Excel spreadsheets.
Yeah.
I think we one step further to put like a Tableau overlay so we can get some insights from a dashboarding perspective. So we're starting to do that to see how our insurance programs actually are performing, how our relationships with our counterparties are shaping up, and sort of how we think about cross-program relationships with various partners. So we're getting those levels of insights, things that we didn't have before.
Right.
What I would absolutely love is a way to actually automate the bow tie assessment, where you'd have like your risk event in the beginning, you'd have your drivers on the left, you'd have your consequences on the right. Base would all be aligned about what are the consequences they're very interested in preventing. We'd have a way to measure those. And then I'd have a tool where I could just put all this data in and it would spit out a risk score. We could then say, you know, if we were to do X, Y, and Z, how would that change our risk? And then you'd be able to see it in real time. I mean, that is my dream. I've never seen it. I don't know if anyone has it, but I would love it.
For you to do your job in an effective way, those tools need to be absolutely available.
Oh, you know, Yvonne, I'm just having this conversation now. We're just trying to say, okay, we think we should do X, right? And everybody at the company is busy. Software engineering time is a premium. So if you're going to ask them to devote time and energy to like a risk mitigation that you want to put in place, particularly on software side or any of the product offerings, you have to make a really good case for what is the value of that investment. And to me, it's about being able to measure that buy down of risk and being able to explain that in a way and show it to these people who are saying like, it's either you or my 2,000 other priorities. You know, what's the value proposition here? So if we have ways to model the risk and to demonstrate the usefulness of the controls of the insurance from a risk perspective, a risk reduction perspective, I think that helps us all make really good cases internally for the work that we feel and know should be done.
I think I can summarize a lot of what you said into efficiency and insights. That's ultimately what you need.
I mean, all that stuff would be helpful, even understanding your risk tolerance and getting some explicit buy-in from management around that. So when we're picking retentions, we're picking limits, that we have some basis for that, rather than what did we do last year? It's probably about the same. Let's try and renew the existing program as is. Like, I'm not interested in that at all. I want to buy the right insurance for the exposures we have, regardless of what we did last year or 5 years ago. You know, it's all about what do we need for today and what is the basis for that need.
Obviously, you talk with your treasurer, with your CFO. They look at your programs. As you said, you're always trying to do that trade-off of when and how to buy insurance, how do you use your captive. It is a very cyclical market, and you know this better than I do. But where is that conversation today within Facebook in terms of where the market is going?
Yeah, I mean, threshold question is, do we think that the premium is less than our view of expected value? and sometimes the answer is yes, and sometimes the answer is no. And when the answer is no, it's like, well, is this more of a market or is it more of a bespoke risk price? And if it's just market, we have a choice about whether or not we want to participate in that. You know, to me, the market goes up, the market goes down. We need people who are just going to say, okay, you're Facebook, this is the risk, this is what we're going to write. There's some sort of predictability, some sort of consistency. We adjust year to year based on, you know, our personal experience. I recognize it's a pool and that we all contribute to the losses of a few, but at the same time, there should be a little bit more specifics and accuracy around the company itself and the premium reflecting the risk of the company, not just the market. And so I think when the market goes a little nutty, then I think that's an opportunity for risk managers like me and in a comfortable position like Facebook to say, is this the year that we just skip it? And, you know, we use our thought processes around risk tolerance to get management buy-in for that and then make our decisions accordingly. So to the extent that we can sort of smooth out the highs and the lows to sort of a more predictable and narrower band, I think we're probably all in better shape.
Yeah, and I think that probably all industry participants would like those cycles to be less pronounced. And I think that investments on the risk management side by customers are a big part of that as well. Of course, there's always going to be a supply-demand kind of balance that drives some of that. But I'm assuming that a big part of that conversation will be the one that you and I are having right now in terms of how corporates and carriers kind of have that kind of in-depth kind of understanding of the risk on both sides and how that kind of transaction ultimately takes place. Now, I'm also curious about your thoughts around claims, because that's also obviously ultimately for the intangible business that is insurance, that's when it becomes tangible. And you've had probably in your career good and bad and better and worse experience kind of with the industry on the claim side. So any observations there that we can also take note?
Yeah, I will say that when claims go well, everyone understands the value of insurance. When claims take 3, 4, 5 years to resolve, and there's like you end up with 35% of your original demand or request, then everyone kind of says, why did I buy this product? It's only worth 35 cents on the dollar in terms of our losses.
Yep.
And so, you know, to the extent that the person requesting or the company requesting reimbursement from insurance can be guided as to like what looks like a good claim, what do you need to have, how should it be organized so that you can get a speedy recovery based on the facts of actual damages. To me, that's the best case scenario, but where it's sort of bring me a rock, not that rock, bring me more rocks, and then you spend 3 years going back and forth on different rocks. It gets frustrating. The business wants to move on. They're like, they've got other things to do with their time than try and dig up, more rocks. And so I think that I've seen both. I've seen claims that have happened very quickly. It's been very clean in terms of the records required. And that's where insurance really shines and you're adding value to the business. Otherwise, you're just being kind of annoying. And you're saying, can you help me? Can you do more testing? Can you do this? And they're just like, oh, I'd rather just not get the money. Let's move on.
There needs to be more conversation and more discussion in terms of what scenarios are out there in terms of potential claims that are not just simple conversations when a claim has happened, because I almost feel it's a little bit too late for both customer industry to sit down and figure out kind of, okay, what does this mean? So there needs to be more dialogue before. And I also think that every single large event in the industry, from 9/11 to the hurricanes to now the pandemic, the contract certainty, it is something that there's a significant room for improvement. And every time you learn, okay, so a big event happened, then you realize something, then the clients realize something, and then you adjust. But in my mind, I think that there is still room to go to make sure that that happens, and that ultimately that bad part of the experience start to be smoothed out, because that's ultimately not the objective of the industry at the end of the day.
Yeah, that's where I think the appeal of the parametric product is so high, is that there's just certainty. You know, XYZ, got it all, done, paid. None of this back and forth business. Yeah. So I know that's hard to ask for when it comes to things like water damage claims or, you know, wildfires in my previous example on the property side or what have you, but it does seem very appealing.
So obviously Facebook operates around the globe, and if there's one feedback that we've received from customers in the past is that international programs are overly complex, and that the industry has struggled to be able to provide a good service around that. So how do you see this coming into a new big global company?
Oh yeah, it's big. It's funny because, you know, PG&E was in Northern California, you know, no global footprint at all. Now we're in, I don't know how many countries. We've got international policies on the D&O property and casualty side. And the hardest part about them is actually paying the bill. I don't know why it is, but getting the paper, paying the bill is always so complicated. There's so much back and forth associated with it that we often ask ourselves, well, we've asked ourselves now 2 years in a row, why do we buy these? They're just more effort than they're worth. I think we've landed with the fact that admitted paper is required in some countries, so we must hold our nose and place them. But it's not a pleasant experience.
Yeah, and I would argue, similar to some of the other conversations we've had, that there is a natural evolution where the industry needs to step up. It is complex by definition. So of course, you're talking about multiple jurisdictions. It's a regulated industry. You have money moving left and right, compliance requirements. So, but I do see the need and the opportunity for the industry to continue to solve those issues. So hopefully the next time you do it is not holding up your nose, but that there's a truly kind of rationale behind it.
Yeah, that would be great.
To share anything else that we haven't covered that you think is important from where you sit today, your knowledge of the industry, any final thought or comment will be great.
You know, I know you mentioned you didn't want it to be a plug for Swiss Re, but I do have to say I'm quite happy with my Swiss Re team. Very helpful. Just super creative, sit down, willing to talk about any solutions. And I just want to say from an insurance point of view, I very much appreciate it.
That's very nice of you. I appreciate it on behalf of the team. I think that definitely having the open door that we have with you and the ability to sit down here, what are your major concerns, challenges, how can we creatively solve them? That is ultimately why we're here. So we'll continue to do that. As I said, I wrote down some of kind of the things you said. We clearly have the video, so it's a good case study for us to think some of the things that you said. And I thank you wholeheartedly for doing this. I know it is a busy time of the year. I know you have a big job, so taking the time to do this with us is very much appreciated. And I hope you stay well and your family as well in San Francisco, and look forward to see you in person one of these days. Let's get vaccinated and then we'll do it.
Oh, I'd love that. Thank you so much, Yvonne.
Great to see you. Stay well.
Good to see you. Stay well. Bye-bye.
Bye-bye.